Recording in progress.
All right. I had a good example somewhere. Just I try to remember it. One moment. I believe, okay, it was here. Okay, I know probably I showed this example a lot. I also had a trade here. So this might be very familiar to a lot of people. Okay, so just a few words about my thought process when using the daily cycle, because I'm pretty sure I haven't mentioned too much about this actually. So when I'm using the daily cycle, first what you must do is if your hometown local time is confusing you, do exactly the same thing what ICT says. Just go to New York time, right there, and now you basically have the chart time set up in New York local time. And the reason behind this is when we are talking about kill zones or any time regarding the market in these concepts, it's mostly set to New York time. So for some reason, the algorithm in the market works according to New York time. Don't ask me why. This is how it works. So we set it usually to New York time, and we also look at the days in the market according to midnight, by the midnight New York time. So this would be the start of the day. And obviously the ending of the day would be once again midnight, by there. So this is all referred according to New York time and not London, Berlin, France, anywhere else. So it's only New York. If you would like, just go back, switch back to your original time. But if you're setting up anything on your chart, that's anything that's time in the market, just go ahead, set up the New York time so you can see the midnight. And when I'm using the daily cycle, the second thing after I do, after setting up the midnight time, is marking up the kill zone. So the first kill zone will be the London, which is 1 a.m. to 5 a.m. So I will make a good analysis of this. So just take a look at the 1 a.m. to 5 a.m. So this is 1 a.m. and this here is 5 a.m. So this section is London kill zone, so London. Now, next to it will be a small section that's called actually lunchtime. So it's like a 2-hour section between London Open and New York Open. So it's a very, very small section. And New York will be starting from 7 to 11. Now, I do know a lot of people will be asking, why am I using 1 a.m. as the London kill zone instead of 2 a.m.? I can imagine a lot of people have this question, but the actual real kill zone is from 1 a.m. and not 2 a.m. And again, this is all according to the New York local time. So again, the New York. Actually, this is the same way how I analyze my charts. So I never do anything differently. I do everything manually. I'm not using any indicators, no bullshit, nothing like that. Only everything myself. Okay. Guys, excuse me, I need to bring probably a charger. Just a moment. Just give me a minute. I'm back. All right. So regarding the time again, everything. So I'm only using the New York time actually when I'm setting up my time, nothing else. And also one more thing we cannot forget is the Asian range. So the Asian range is from 7 p.m. So 7 p.m. to midnight. And this section would be your Asian range. And when I'm using this box, I just pull it out from 7 p.m. to midnight. And I'm using the high and the low. And right here, you're gonna click this button and try to pull it to the body of the market. So not the wick, try to pull it to the body. See, I'm using the body here too. I'm using the body. So this is the Asian range, not the wicks. The reason why we are not using the wicks, the reason behind not using the wicks is the real data feed in the market is only the body. The wicks many times are the spread and manipulation made by the broker provider by itself. However, if you look at all brokers, the body is always at the same level. The only difference would be the wick because of the spread. So that's the only difference. So just use the body. I usually add this color to it to make a difference. Now, a lot of people might be asking, why is it so important to mark it up? Now, the reason behind marking up the Asian range is many times the daily cycle will only work if London Open trades below the Asian range. So if you take a look at it, here we see the Asian range, and we see the market trade below, not by much, just a little bit, it just trades below the Asian range. And then rallies in the entire London key zone. It starts to rally. And in the lunchtime, we might see a little bit of consolidation, and we should expect the high created of the day somewhere around somewhere in the lunchtime. So in these 2 hours between the two key zone time, so 5 to 7, we have 2 hours here when the market creates the high of the day. Now, again, one of the main importance, almost everyone might know already, the main importance in the daily cycle is we focus on the same trend direction that London created. So let's say if London is bullish, then we should expect the market to make a pullback and continue into the same bullish direction in New York as it done in London. So this alone makes you very consistent. And regarding the fib, if you use the fib from the low of the day to the high of the day. This would be your trade. Right, so this is a very classic daily cycle trade. So you can see it's all about the market continuing the same direction from a New York entry for the rest of the day. And just before the end of the day, it usually creates also a reversal. So this is very typical daily cycle trade. Your entry would be the 62%, not the 70. I could also take this level off actually, like this. I could also take it off. So your entry is always at 62%. The only reason I'm placing this here is to imagine sort of more of like a zone here. So this would be sort of like a zone right there. So I kind of imagine this area as like a point of interest. Same as when we use supply demand area or order blocks, we try to imagine it as a point of interest in the market. Also just change the color of this. So we try to enter in this area and take the trade on 62%. Now, a lot of people might be asking, what's the take profit with a daily cycle trade like this? Now for the take profit, all you need to do is look left and find an old high. Now this is an old high, and we can use this as take profit. And you see how the market all it done is just run up to the old high, take out the buy stops at this old high, and then make a reversal. Also, one more thing you can use for the daily cycle is these levels. These are the standard deviations of the move. And the time you would be using this level is when, let's say, one of these levels, the standard deviations is aligning with an old high or an old low. So in this case, we could say the number 1 is the closest value that's aligning with it. So we would take the trade there. Like that. So classic daily cycle trade. It happens a lot of times during the week. I would say I'm confident to say I usually notice this on a single pair 2-3 times a week, and it offers somewhere around 1 to 3, 1 to 4 risk rewards. So it's obviously not the biggest risk rewards in the market, but it's very consistent and works a lot of times. So see, so if we target the all times 1 to 3, like that. So I know everyone wants this or this, but if you look at consistency, and this risk reward is far less consistent than something like this, the 1 to 4, 1 to 3. So, and regarding the risk reward, this specific risk reward is in the daily cycle. So it's not something that's happening on all trades. So I'm not saying all trades should be 1 to 3 or 1 to 4. The risk reward is mostly determined by the setup itself. But what I'm saying is that the risk reward on the daily cycle is 1 to 3, 1 to 4 either. And it's very consistent. It happens a lot. If anybody has any questions, just feel free to let me know, because I'm seeing that everyone's just very quiet. So just ask me any questions. Thank you, guys.
I have just yeah, let's go. Let's go first. Let's go.
Okay, just a question, Dan, can you hear me?
Yes, I can.
Okay, sorry, yeah. Would you prefer to enter on the 15-minute time frame on this, or would you go for 1 minute or any lower time frame to look for the same kind of pattern?
I only use the 15-minute for this. Now this is the daily cycle, so it's a very simple concept. This is the concept I want to teach everybody to have the consistency in day trading. So this is a concept for day trading only, and it works on the 15 and 30-minute time frame. You shouldn't be using lower time frames for this entry, and the reason behind that, like let's say, look at this week, how the market just came down with a strong week, and this week, even on the 1 minute or 3 minute, 5 minute, it was moving so fast you couldn't catch any trade. So the reason why we would not be using lower time frames in this concept is many times in New York yield zone. If you take a look at the time again, take a look at when the market arrives here, 8 o'clock, see, to 8:30. So we have sort of a half an hour window here. So right here we have 30 minutes in the market when economical news releases get released, and usually they are high impact news releases in New York. So we have sort of this 30-minute time window where the real entry will happen, and you can take a look at it's actually happening in that time. See that? So 8 to 8:30. Right there. And also, if we take a look at these, we should be able to see okay, I'm not sure how I do it, but we should be able to see a news release here. So I remember we had. If anybody knows how I set the economical news releases, I would really appreciate that, because I do remember at this time we had a high impact news. So yeah, I just wanted to.
I think it's that. Because I remember this entry you shared with me. This entry at this level was big news economic. I remember that. It's like the the job impact, I think, economic on January.
Probably it was that. Never mind. There is I just want to show that this particular trade was hit by economic news release, and it gives a lot of fuel to the daily cycle. So I can go to so many pairs and show the same concept, but this might be one of the the ones that's more accurate. And you know, if you really want to be accurate, you can also use these maybe. Or maybe I should. See, and also Asia range standard deviation is aligning with RTP. Okay, but I'm gonna discuss this furthermore, but I just placed this, so I do not want to confuse anyone. This technique is something that will be used to determine the high of the day and low of the day price levels. So I'm gonna discuss more about this. So I do not wanna give so many information that no one can remember it. So maybe if I yeah. Okay, I'm gonna explain this later on. Right. If anybody has any questions, just feel free to let me know, and
Yeah,
just anything, guys.
I have a question. Backtest, and did it work? If you took the as in low and as in high with the fib retracement, I think we have OT retracement of the London, but I backtest. Now, if you took the high and low, I think it's working on the opening of London.
Are you thinking about this?
If you took the fib level, you know, and you put on the low, and you took the high, yeah, you have you took the high and low of all the ASIN session. So on the top, and you know, the zero, you put the zero on the low, not just below, just yeah, exactly. And you have on the opening, you have 0.62 on the London, and go at 1 for the high of London.
Yes, you could use this, but take a look at this. That a lot of times what the market does is it takes out the Asian low.
Yeah.
There. So it takes out liquidity. So if you are taking an entry like this, you should definitely use bigger stop loss, and not only the stop loss. Yes, exactly, because it will take the liquidity most of the times.
Okay.
So what we usually do with the fib is we take the entry. And also, guys, the fib is also just one technique, right? So it's not the only thing I'm taking trades on. I take trades on breakers. I'm taking order blocks. I'm taking Asia range standard deviation trades. I'm doing a lot. This is only one technique. So if you would basically place the stop loss to the low, and the TP, let's say an old high, or obviously not this one-to-one, not like that, somewhere around an old high or something, you know, where we have maybe buy stops in the market, like that. And so this is the way you would use the stop loss with the TP. And in this example, you know, let's say if you are using it like this, as Nico is saying, then, you know, it might hit the stop loss if you're not using a bigger stop loss. So you just gotta be a little bit careful with that if you're taking trades like this. Any question, guys, regarding the daily cycle? Don't be shy. Please ask me anything if you have any questions on your mind. I can't believe that everyone knows everything.
Did you work with the midnight open or the equilibrium of the ASIN session? You know, sometimes I know you know the concept. I think of equilibrium of the ASIN session.
To be honest, I'm not using the equilibrium of the Asia range. I'm only using the high and the low, and also the standard deviation of the Asia range.
Okay.
The standard deviation, that's something I would like to explain later on.
Yeah.
So I would like to explain that later on, because that's sort of an information that I shouldn't even be allowed to share, but I would like to share it. Just I need some time to see everyone is prepared for that. So that's a concept. It's a very special concept, because with that concept you are able to call daily highs and lows very accurately to the pip.
Understand.
All right, guys, any questions? Or only Nico
What is your best? What is your best win in the forex market? That's a good question, no?
regarding percentage or?
Yeah, percentage, not money, because we don't.
The biggest win I had was holding a full volume 1 to 100 trade, but it's not consistent at all. So I did get very big risk rewards because I was at WWA, and you know they teach the big risk reward. I even posted a few of those early in my Instagram, but if you want consistency, that's not the way you want to think. So those big risk reward trades, it's not what you want to do long term. So it's very good. It's nice to reach it and hold the full volume, but if you want consistency and you just want to save a lot of headache for yourself, I would say just do not focus on such a big risk reward, because especially on a live account, it will just cause you headache long term that you will see. So all right, so the psychological problem with the bigger risk reward is over time you will try to beat your best risk reward every time. So you always try to get the best possible risk reward and show everyone you get the highest possible risk reward. But many times you're just fighting against yourself, because a lot of times what you will notice that the market, as I mentioned before, it starts moving somewhere around, sometimes even close to 1 to 10, or somewhere between 1 to 5, 1 to 10, and we usually never close around that area, you know, if we try to get too big risk reward. But if you would start closing all your low risk reward trades, you will be very consistent. So to me, it's just psychologically a battle between your ego and trying to show off for everyone. So, you know, if you want to eat from this and you would like to make a living, just forget the 1 to 100 trades. I'm not saying it's not possible. I've done it. It's possible. It's 100% possible to do it. But if you would like to eat from your trades, then it's not something you want to be doing. Yeah, just honest opinion.
No. It's real. It's real.
Daniel, what's good?
All good. How are you?
Doing good. I just had a question about like one of the topics you're saying. You said that might have us sign an NDA for it just because of the fact of how like accurate it is. Do you think you're gonna like ever release that topic like sooner or later?
I believe, to be honest, I believe I should be sending a couple of contracts out. I know that I have a few guys who really shy away from their identity, so they never want to show who they are. I do respect that. I also want to respect my own identity. So if someone wants to hide their identity, you know, I haven't got a problem with that. So I fully understand. But I must be doing something like an NDA or something on a certain topic, but only on a certain topic. And yeah, so regarding that, when we get to the topic, I will definitely send it out, because it's something I do want to teach that, because it's very accurate. But yeah, thanks for the question. Actually, I guess it was Aaron. And no reply.
Wait, what's up?
Are you still here? You still here or?
No, I'm still here.
Okay, just you Aaron, right? So
Yeah,
Okay, nice to have you here. Thanks for joining.
yeah, no problem.
All right, guys, if anybody has any questions, just please let me know, because it's for me, it's like already 11 o'clock and I do not want to waste people's time. I know a lot of people are already staying up very late. So I do want to respect everybody regarding that.
Yeah. How many trades did you take?
How many trades I take?
Yeah. On one, for example, 1 week is like one trade every day, or just, like, I know that you like a swing trade and, just open and manage the trade on the swing and just relax and chill.
To be honest, it depends. It depends on a lot of things. I'm usually very active in the markets. I do get a lot of trades a week, but let's say the last 2 weeks I barely had any trades, because I was getting ready to start this mentorship, and also the first week of Signals. You could imagine I've been texting back like 400 messages every single day.
Yeah.
So in this case, I haven't even had the time to look at my charts. So, it is what it is, but usually I'm very active.
Okay.
Yo, Daniel,
Yes,
can you
go
put
ahead.
me in the new group from your mentorship?
Sure. What's your Telegram? I will text you right now.
Yeah, Stifler 322.
Yes,
Just a moment. Just one moment. Can you just please repeat that again?
Yeah, okay, Stifler 322.
Can you write that in the chat? Because
Yeah. Okay.
Daniel, question regarding daily cycles.
sure, go ahead, please.
So I haven't. What are the main variations that you see that are repeated that you're mentioning about 2 to 3 times a week? Because I remember you mentioned earlier on your Instagram, like not Instagram, but I remember you mentioning it earlier as well, that this kind of system happens a lot overall, like it repeats.
So override the pips in the daily cycle.
Yes, like if you want to just use like, something to draw it over or something, whatever is easier for you. And then we can look at the chart, whatever works for you, that's easier.
Wait a minute, just let me try to fully understand the question. So I do not want to misunderstand. So the question is how many pips I can capitalize on the daily cycle, right?
No, not the pips. How many times, like you mentioned that 2 or 3 times in a week or something, the daily cycle, say for example, if you are going bullish during before Asia or something like that, then if New York will reverse or London will capitalize on the previous day's highs or lows. So is there like, something like a pattern that you have in mind, like if you are bullish, if Asia consolidates, then London will take the highs or take the lows, something like that?
A pattern. Well, so a lot of times for that I'm using the insurance standard deviations. Okay, so regarding the reversal, so if I'm correct, you're asking how can I determine at which point will the daily cycle make the reversal, right?
Yes, that also, yes.
Okay, so for that we can use one of them is the fib levels I shared in the PDFs. Another thing is, let's say an old high or low gets swept by 10, 20, 30 or 40 pips. We can expect the market to reverse from there. And also what's this? Okay, sorry. So also a lot of times we can determine the 10, 20 or 40 pips fib by the market matching with let's say a fib level in the market. So let's say, for example, let me show you an example. So this is determining when the market is making a reversal after the daily cycle. These ones. Okay, let's just use this. We could also say something like that. This is one of the ways to determine where the market will make a reversal after the daily cycle. So a lot of times when we have a buy stop getting swept, we usually should notice a 10, 20, 30, 40, or 50 pips sweep. Now, why are there so many different pip values, 10, 20, 30, 40? Now it's all relative to the time frame. Like let's say on a 1 hour time frame, you could be using 40, 50 pips. If that's aligning with one of the levels, you can expect the market to reverse that. If you're on a lower time frame, let's say a 50 minute, 5 minute, or 1 minute, you should expect 10 to 20. So it's as you're going higher in the time frame, obviously it's going to be higher with the pips. And you will also notice in your backtesting, and this might come with experience and not something that can easily be taught, is something that you should notice that a lot of times one of these levels will be aligning exactly with the fib level. So any of these will be to the pip aligning with the fib level very accurately. And that's one of the ways you could determine if the market will be making a reversal. Now, again, this is daily cycle in this example, how to determine when the daily cycle will make the reversal. And regarding the reversal, we have two types of patterns. So this here, that's right there. Now this has two types of patterns and it looks something like this. We have sort of like an important level in the market. Now imagine this purplish pink line as a very important level in the market. Now, what are important levels? Now, important levels can be fib levels, they can be buy stops, sell stops, they can be order blocks, breakers, anything that's showing you a point of interest. And in this case, this will be our point of interest, a 1.5 standard deviation fib level, aligning with 30 pips fib. Perfectly. So it's perfectly aligning. So it's not off by something like that. So it's not off. It's aligning almost perfectly. You should see only a few pips difference and not more. It's almost perfectly aligning. I see Destiny raising a hand. If you have any questions, just ask me anytime, anything.
I have a question about the buy stop or the sell stop. The buy stop and sell stop signification is like for you the low of the high of the day, or the equal high or the equal lows. For you, it's a buy stop or sell stop, or like the buy side liquidity or sell side liquidity.
Now, buy stop and sell stops is every old low in the market is a sell stop, and every old high in the market is a buy stop. Every equal high in the market is a buy stop, and every equal low in the market is sell stop.
Right, okay. That's what we sweep the liquidity on the equal high or equal lows. We could do a liquidity below or behind.
Yes, exactly. You are correct.
Okay, correct.
And referring back to this example, that's referring back to this question. So how to determine the reversal? So let's say this purplish pink line would be an important level. Now, right here, we would have two types of patterns in the market. It's only two types of patterns, nothing else. Do not use anything else. Now, one of the patterns will be looking something like this. Now, okay, everyone from the Phantom will be saying now this is the confirmation entry, but it's the risk entry, right? So it's the lower time frame risk entry. You guys know this, the break of structure, change of character, retracement, order block, stuff like that. But in reality, I'm not saying this as risk entry or anything like that. This is a confirmation in itself. However, it's slightly different from what's popularly taught from Phantom and all around the internet. So it's slightly different because we are not looking for an order block or anything. We are only looking at a breaker. So this low would be a breaker. Right? So this would be a breaker. So now I assume a lot of people will be asking, what is the breaker? Now the breaker is an order block in the market. Like let's say this would be an order block in the market that got broken right there. So the order block wasn't respected. See, so it's an order block that got broken, and also something that makes the breaker is this high will be swept. So it cannot be looking like this. So not like that. This last high, it must sweep the buy stop. So this is one of the patterns to determine if the market will be dropping. Another pattern will be something like this. It's a very strong move in the market. The market drops down. The market makes a retracement and then drops down again. So it's very interesting because here we do not see any of the break of structure, change of character, stuff like that. So we do not have this, and we do not have this. So it's very popular terms in the market. Right there. So And in this example, the way you would take the trade is you should see the market. So you should expect a long move, the market to make a pullback, then a retracement. And all this is playing out at an important level. So remember that this purple line is the important level, or this pinkish purple line. This is the important level. And after the retracement, you can take the trade like this. Right, the market comes back to the OTE, and that's where you would be taking your trade. So this is the only two confirmations I have for lower time frame trading. I'm not using these. Okay, so I'm not using this. This is not something I do. I guess everyone knows this one. So it's very popular. So these I will not be using. I'm not teaching this as confirmations. I'm teaching these two. And these are the two confirmations that actually work consistently. Now, I know for a lot of you, it might be a little bit strange to hear that we would be taking the trade without any shift in market structure, just the pullback retracement and then the drop. But I can show you a lot of examples with this. And if I'm able to find a couple examples, then I might be. Okay, I think I have one here. See, I kind of remember this, so hopefully everything loads without an issue. Ooh, it's too far back.
You have yesterday. That's fine. It's M3 on the retracement and something like that.
Yes, Dustin, ask me anything.
I just had a question. If you ever planned on like releasing your full trading plan, like a
Yes, I plan to release that after this call. I plan to upload everything for tomorrow. So that's the plan. I do plan to release it. So it's a long journey ahead of us. I want everyone to get everything as soon as possible and start learning everything. The only reason I didn't want to rush anything in giving too much content is one of the reasons is I didn't want people to share stuff from me from day one. Like, let's say I still had the launch week and I didn't want people to start publishing content from me too early, because I know people will share this. So I cannot do anything about that. I know people will share it. So that's it. But, and also one of the things I wanted to send like these contracts, but I figured out I couldn't, because a lot of people try to be more private with their identity, same as me. So I do respect that. But yes, now I will be starting to upload everything. So don't worry about that. And thanks for the question again.
Thank you.
Daniel, your mic is like we can't hear you.
Oh, thanks for letting me know. Okay.
Yeah.
So the only thing I just said, I think I need to buy the paid version because I cannot go too far back in the history. And also another thing I said that this would be a retracement, but it's not the best example for that no break of structure concept, because here we have actually sort of like the shifting.
Yeah, I
market.
send you the chat if you want to see if it's the retracement.
If you could, that would be good. And on the next session, I will be buying the paid version. So if you could share it, that would be very appreciated, because I want to show an example.
Yeah, I share on the
Thank you, Nico. Thanks.
chat. I think it's working. It's like the retracement you said and the dojans.
You should be able to share your screen at this moment.
Oh, me, okay. Just a minute, because I share on the on the chat, so just a minute. So I think it's just easy for me because so yesterday I took this entry on the dojans. So this is for me my swing. This is my swing, like my swing high and my swing low, like that. I'm sorry, this is like that. The first entry I took on the dojans, like that. And you have this confluences with the other block. This is the other block. We have break of structure, and you come back, boom. Okay, we have first entry. Secondly, what I took this over entry because I took the fib level on my low of New York, like that, and my old New York, my swing port, the high, the best high. And when you put like that here or here, you have like the fib level. Give you entry price on the 0.62 and 0.7, and you can see because this is the break major structure, you can hear retracement and continuation, and boom, stop on the high of the old New York and the old over New York, because they know we have liquidity, perhaps retracement, and boom, continuation. But we see that's, I think, the concept you spoke. I'm not sure, but I think it's that.
That's very nice. Do you actually have the paid version on the TradingView?
Yeah, I have I think no, don't think so. I don't want to pay.
You are just like me.
I don't know. I think yes. No, I don't know. Probably yes. No, I think not. I think not. I don't know, but I just took, the fib level and the swing, the low, and the high, and give me just the retracement. But I took this because I know here, this is the Asian session. This is the buy stop, equal high, they be taken because we know the equal want to be taken, retracement, a big pullback, and boom. And you can see after for the phantom members or things like that, we have auto block here on the lower time frame, and the sweep here, little liquidity here, and boom, that's the continuation.
Nico, can you please, as I'm looking at your chart, actually, probably you have the paid version, which is very nice. I think you have it. May you just go to gold, and I would like to show an example that I couldn't show on my chart.
Yeah.
Just if it's possible for you to go on gold, because as I said, I cannot revive my chart. I need to upgrade the version.
You can share.
But that's what I'm saying. I cannot go back too far in history because I get an example I want to show. And what I seen on your chart that you have the paid version. So that's what I'm saying, because you don't have any ads.
I want to send my screen again.
Yes, please.
Okay, sorry. sorry. Because my screen is very big, so I don't know if you see, because I have big screen. I think I will.
Yes, I see everything perfectly.
Okay.
So if you just go to gold, I could show an example there. Gold.
Where?
This gold. You know what's gold? Gold market. The metal.
I'm fucking French. Go ahead. Go ahead.
Gold. What's gold for you?
Oh, just a minute. What is gold?
XAU USD, the third option.
Oh, okay.
and just please go to the 30-minute time frame. And just go like 1 month back in history. Just try to go 1 month back. Just a little bit more back to the history. I want to show you something. Just more in the history. Just use your chart.
Yeah.
Just more.
What do you want to go over
Yeah,
another day?
go this way. I want to show you something. Okay, now zoom into this section. Zoom in here.
Oh, where is it? Wait, sorry. Yeah. Okay, we zoom in.
Zoom in, yes. Okay, and click this. Let's hope this is working for you. Perfect. Now go to a 5-minute time frame.
5 minutes?
Yes.
Dan, I think you can take control of the chat.
I think.
Zoom there. Zoom in there. And now, if it's possible, in this area, go to the 1-minute time frame.
1 minute?
Yes. Okay, now stop. Now, this is the example I wanted to show you. So this is one of the trades. If you with the no break of structure. So if you pull it from here to here, your fib. So from this swing low to that swing high, that's the 62. So the reason why I'm showing this, because this is the entry when the market doesn't give no break of structure either. See, so it just explodes. So a lot of times this will happen. It will happen a lot, and actually this area, somewhere around this area, this was actually a breaker like that. So probably if you go to the 5-minute time frame, I can show you the breaker and how this no break of structure entry works. So on the 5-minute, okay, stop there.
Yeah, I know. I saw. Yeah, right. Yeah, right.
The reason why it does the breaker,
I think it was like that.
well, you see that's not accurate. It will be below. The reason why I'm calling that the breaker, because this is how the market actually made the pattern, if you look at it. So market went down. This part was actually an order block, but the order block was not respected. See, the order block got broken. This order block is gone. And we have sell stop sweep. See that?
Yeah. Okay.
So this swept the sell stops, and this candle was an order block that became the breaker because of this move. So now we expect the market to trade back into this level. So we would expect something like this.
Okay, I understand. I think here, this zone, like a 30
No,
minutes.
only that candle.
Okay.
See, so just if you mark that up, that was the breaker. And from the breaker, as a continuation trade. See how accurate was that?
Yeah, sure, because we have the break of structure here and we have the
Yes.
position.
And
we
also
have-
this was sell stop.
Okay, this is the second one. On the because this has
Exactly. And if you remember, this here on the 1 minute was the concept that I'm trying to explain. So it was the entry with no break. See, perfect time frame. So the market goes down, makes a pullback, makes a retracement, and then explodes. And this happens at an important level in the market. Right there. So it's always happening at an important level, and you would pull your fib from this low to this high. And this here, exactly. And this here is optimal trade entry. So we see exactly the same example here. This was, so now you're just on the real chart. So this is what I'm trying to explain. This here was the breaker. The market reacted. Here we see a drop in the market. We see a pullback, retracement, and no break of structure. So this is one of the confirmation entry concepts I use.
And if you take the low here, the high here, you can take another
Yes,
entry.
this was also a re-entry right there.
Another second entry. 120 like the withdrawal is like a like the 220.
Well, you know, in this case, this was a very big trade. So what you could do is you could go back to the 30 minutes.
Where is it?
It's a good question. Yeah, that was it. So you go back to the 30 minutes. Now look at this. Now this here, you can target these. These are buy stops. These are equal highs, and these are also buy stops. So from this trade, you got all this target. So see, so we can increase the risk reward very nicely. So the risk reward can be increased perfectly. Perfect. So see, so it's not only 1 to 3 trades. So this was, I think, probably 1 to 20. So it's possible to get very big risk reward too. Just if you get big risk reward, it's very important to also be closing partials of your position. See this here, sell stops. Excuse me, buy stops.
Yeah, it's a big trend, but yeah. So we stop.
Why you wanna take a trade at the equal high?
Me?
You just wanted to take a short
No,
position.
I know it's equal eye, but just kidding to see that because the line. Yeah, equal eyes that to be taken after. Yeah, the drop is coming here. Fuck you.
Yes, but my whole idea was just showing you how this entire, again, just the same example. So market goes down.
Oh, but I
makes a
remember.
pullback,
I remember
makes a
this.
retracement.
I remember this. This is the remember.
This here, exactly
yeah.
the same example as this one. Everything is exactly the same. If you zoom in here, you see everything exactly the same.
Oh, I can. Go. So this is. Yeah, exactly. Yeah, exactly. I remember you sent me messages. You sent me M5 breakout structure, and the goal will be explode. And I said, no, just kidding, no explode.
Yes, I do remember we just had a conversation about
I
this.
because I took short. I remember I took short, and I said, no, I will don't close my profit. I said, no problem. And I said, oh fuck, this is the breakout structure, and boom, the supply, boom, coming back like the phantom explained, boom, boom, and explode. Yeah.
Yes, I do remember we had this conversation about this actually. So yeah, it happens a lot. So the whole idea I just wanted to share. is referring back to someone was asking that how do I know if a reversal is going to happen? Now this is how I know. This is the only pattern for the reversal. Long move, pull back, retracement right there, and take the trade. Now this only works at important levels, guys. So it's only working at important levels. So let's say you have a breaker, order block, or something like that. This is the way to do it. This area was something like an order block, I think.
Yeah.
All right, guys. Anybody has any questions? Just please let me know.
Do you use different candle formations? Like, are you looking for certain types of candles on your entries?
Not really. I'm not using any candlestick patterns. The only candlestick pattern I'm using is this. Is the swing low and the swing high pattern. I think I probably shared in one of my PDFs. So first we have something like so this is the only candle formation I use. And I do know all the candlestick patterns that you might be thinking of, like morning star, shooting star, dropping star, doji, stuff like that. So I do know the candlestick patterns. I was also a retail trader back then, but this is at the moment, if I'm looking at candles, the only thing I'm looking at is this 3 candle formation. This is a swing low, and the swing low has 2 higher highs on either side. Now this is what makes a swing low. And for example, I could pull the flip from this low to, let's say, a swing high that's obviously the same, just the opposite direction. So this is the only candlestick formation I'm looking at. So anything aside this, I'm not using candlestick patterns as it's commonly known in the industry. So thank you for asking. That was also a very nice question. Thank you for that.
Thank you. Thank you.
All right. Well, I hope everyone is enjoying this call actually, because personally I do feel like even this daily cycle and this lower time frame entry pattern is very useful. Obviously, it's very simple concept in itself. So a lot more will be coming, but I hope everyone finds this useful already. All right, any ideas, guys? Any questions? If not, soon I might be ending this because it's already getting midnight here. So I do want to respect everyone for his time. So.
Hey, Daniel, I have a question.
Sure, please go ahead.
So when we're looking at the daily cycle, Asia's been swept. What happens if if this pattern that you're making right now for the swing high, swing low, what if that's not printed? What do you do in that scenario?
All right, so if I'm not having a swing low or swing high, you cannot use the fib. This is the only time you can use the fib. So let's say, take a look at this. This here is a swing low. Okay, let me use the arrow. This is a swing low. Take a look at it on both sides, okay? Right here, this is the low, and on both sides of it, it has 2 higher highs. So let me just zoom in. So we see a 3 candle formation. So this would be see, so in this case, I have a swing low, see, exact same pattern, 3 candle formation with a low with 2 higher highs. Now, this low is telling me that I could use the fib from this low until the next swing high, which is this candle. I hope everyone sees it. This right here with 2 lower lows on both sides. So in this case, I could use the fib from the swing low to the swing high. And you see how where the market comes back, makes a retracement around this area. So this is where you could take the trade. So I hope I could answer your question with that and I understood correctly.
Yeah, thank you.
Thank you. Anybody, any questions? If not, I will soon end this because it's getting late. And thanks for everybody's time and attention. I really appreciate everyone who was joining. All right, guys, so I see there are no questions, I assume. If there would be, do not shy away from asking. Just ask me anything, or if you have any private questions, just send me a message. And, maybe you have a question you want to discuss between only me and you. It's fine. So just send me a private message if you have any private questions, or I can help you with anything else. All right, guys, thanks for everybody's time. I will download this recording and upload it for those who weren't able to join. Not sure why my link wasn't working for a few people. They told me I'm doing something with the settings, but they will be able to watch the recording. All right, guys, thanks for everybody's time. Have a good night. Bye-bye.